Bismillahirrahmanirrahim. Assalamu alaikum. I am Syed Akif Shah, lecturer finance at Institute of Business Studies, Kohat University of Science and Technology. The title of this course is Intermediate Accounting, and the course code of this subject is BS 363. This is lecture number 11. The topic for today's discussion under this lecture is accounting treatment for bonus shares. The outline of this lecture comprises of two main agenda points. That is concept of bonus share in public limited company, and secondly the accounting treatment and its illustration. So dear students, after listening to this lecture, you should be able to understand the following phenomena. That is, what are bonus shares in public limited company? Like in the case of additional profits or the large number of journal and capital reserves, the company may decide to issue certain number of rupees or dollars from those journal reserves and capital reserves to be issued as bonus shares, and then to make that reserve account as a permanent part of their paid up capital is known as bonus share issuance. This is normally decided by the board of directors of any public limited company, that when they desires to capitalize their journal reserves into the permanent capital portion. And then we will look at the accounting treatment, that is how to incorporate the accounts and the journal entries in different section of accounts. As we are following the double entry system, accounting systems, so at the time of issuance of bonus share, there will be a particular account which needs to be debited and the other one needs to be credited at the time of declaration of bonus issuance, and then subsequently debit and credit entry will be recorded for the issuance of bonus shares and making them the permanent part of capital account. So what could be the accounting treatment for the bonus share issuance? Fully paid bonus share may be issued at either at par or at premium, which I have explained in my previous lecture, that what is the issuance at par and what is at premium. Just for the recall purposes, at par means when the company is issuing the shares on its original face value, it is par value or registered value. And when the company is issuing its share above its par value or the original face value, then it will be known as issuance at premium. Here we are taking the example of issuance at par. We are taking into our consideration when fully paid up bonus share. When fully paid up bonus share are issued at par, the following journal entries shall be made. Number first, declaration entry. We need to debit the reserve fund, or we can also write profit and loss appropriation account in the debit section of the entry. That is, the first entry needs to be debited with the account title of journal reserve, a reserve fund, a profit or loss appropriation account, or any other respective reserve account like debenture sinking fund account, or capital reserve, or the journal reserve fund, which the company has previously established for this purpose. So if the reserve fund does exist, then we can debit this fund, or we can also write the profit and loss appropriation account in the debit section of the first entry. We are also bound by the question written in different illustration that they were suppose us to write the particular account title in our debit entries. So therefore we need to follow the question instruction accordingly. So the first entry for at the time of declaration of the bonus issuance will look like this one, and the second entry, which will be credited with the title of bonus to the shareholder account, which is a kind of a temporary owner's equity account, which will get vanish after the proper issuance and recording of the bonus share accounts into the permanent portion of capital account. Subsequently, we need to perform another entry as well when the bonus shares are going to issued at par, which is termed as the issuance entries. For the issue of bonus share, we can debit the same account we have credited previously in the in the declaration entry. We have credited bonus to the shareholder accounts, so it needs to be write off in the subsequent entry when we will issue practically the bonus share to the shareholders. And this debit entry will actually cancel out the credit entry in our previous step. So after performing this debit entry with the same amount we have credited in our declaration entry, bonus to shareholder account, it will cut off. We can write the credit entry, which is the permanent part of the balance sheet known as share capital account, in the liability section of any balance sheet, and further properly mentioned in the capital paid up and subscribed capital portion. We can see that the share capital account, which is a permanent nature account, so therefore the journal reserve funds has been transformed into the permanent part of the owner equity, which is share capital account in this case. And the process of converting the reserve funds into the share capital account with the due process of the issuance of bonus share is known as capitalization of profit, if this is coming from profit and loss account or from the reserve fund account. So this is known as capitalization of our reserve funds or profit. Now let's check it out, the illustration in the subsequent slide. Let's take an example, which is illustration number 3.5 according to Advanced Accounting book by M.A. Ghani. A company has a share capital of 7 lakh rupees. Its total share capital, which is the permanent share capital, 7 lakh rupees in the equity shares of rupees 10 each. Each share is rupees 10 worth, which are quoted in the market at 20 rupees. The par value or the actual value of the share is rupees 10, but on the Karachi or Pakistan Stock Exchange nowadays, it is rupees 20. The company now declares a bonus of rupees 600 out of its reserves. The board of directors has decided to declare a bonus share of 6 lakh rupees out of its reserve fund, and this bonus is to be paid out by issue of fully paid equity shares of rupees 10. And the instruction are asking us to write down the proper journal entries to record the above transactions. So as we have learned in our previous slide that there should be 2 entries. Number first will be the declaration entry. The pattern is well known to the student that this column belongs to the date column and this belongs to the account title and explanation. These two are account titles, and at the beneath of these two titles we can see in the brackets a small narration. This is why the title over this column is usually account titles and explanation. This is our first debit column and this is our credit column. So first of all we need to perform the debit entry, and which has been pretty much clear in our previous slide, that is to declare the entry of bonus shares. So the first entry will be to, as the question has clearly mentioned, that we are going to pay out these bonus share from our reserve accounts. So therefore we need to debit our reserve account with 6 lakh rupees, and at the same time 2 bonus share account, because we are issuing the bonus shares to the existing shareholders. So we can write down at the credit side 600,000 rupees. And then we can write a small narration that being the bonus declared try to write as shortest narration as possible and as precise and concise as possible. The second entry will be the issuance entries of the bonus share. This is the time we are going to actually issue the shares to the general public, not and particularly to those who are already shareholder of our company. Those are also the general public. The subsequent entry of issuance will be, we need to vanish this account, which is a temporary account and which does not belong to any financial statement. So therefore we need to write this off. So in accounting, the general rule to write off any account balance is to give an opposite entry of the same title or same account. So in our first entry, bonus to shareholder account was in the credit section. So in order to cut off this impact or to remove the balance from the bonus to shareholder account, we are required to perform a debit entry with the same title. So therefore the bonus to shareholder account is written in the debit section of second entry, which is the issuance of bonus shares. We have written a debit entry of the same amount in the debit column of this question. So therefore these two will set off and ultimately there will be zero balance in the bonus to shareholder account and it will write off. This account will vanish. And subsequently, which account title shall be credited? The permanent account, which is going to be presented in the balance sheet under the owner equity section, known as share capital account. This is the owner equity, and when the owner equity increases, it usually credited. So therefore we can write down 6 lakh rupees in our credit column. And finally, with this short narration, these two entries will be clear to anybody who has the knowledge of accounting. That is, being 60,000 bonus shares of 10 each issued at rupees 10, because the question was explaining to issue 6 lakh out of its reserve at the rate of rupees 10 each. So 6 lakh need to write down divided by the per share price, which is the original issuance, and the issuance of these bonus shares are at par. Therefore we are required to divide it by 10, not by the market price, which is 20 in this case. So the number of share we are going to give to the existing shareholder will be 60,000 shares. Therefore this was the method to calculate how many shares or the quantum of share the company is going to issue to the general public, or rather I must say to the existing shareholder who are also part of general public. Let us take another example, which is illustration number 3.6. The extracts are given from the balance sheet, this time from Company A Limited on December 31st, 1993. We have taken the extract of a balance sheet, which is actually the owner equity section of a balance sheet of A Limited company. The authorized capital for this company is $20,000. I have already explained in my previous lecture physically in the classroom that what were this authorized capital, that is the legal capital allowed to the company by Security and Exchange Commission of Pakistan or any Security and Exchange Commission of the relevant country, which is 20,000 ordinary shares are allowed to this company to be issued at 10 each, which is the initial original face value or the par value. So the total paid up capital or legal capital allowed to be issued by and raised by this company is 2 lakh rupees. Out of these 20,000 shares, the company has issued and subscribed capital, which is 7,000 shares, ordinary shares at the rate of rupees 10 each, fully paid. These are the shares issued by the company and these are fully paid by the existing shareholders or the owners, which is 70,000 rupees. The reserve fund with this company is $36,000, And the profit and loss account is showing a profit of 29,000 rupees. The currency we are using is actually rupees PKR. Then another narration has been written that the board of directors pass a resolution to capitalize part of the existing reserves and profits by issuing bonus shares. Now the board of directors has decided to issue bonus share to the existing shareholders. One bonus share is being issued for every 4 ordinary shares held at present. This narration means that any investor or shareholder who is owning 4 shares of this company will be allocated 1 additional bonus share. So for example, if a particular investor has only 4 shares, he will be granted 1 extra bonus share. And if any investor has 8 number of shares of this company A Limited, then he will be allowed to own, or he will be issued 2 extra bonus shares, because this narration is saying 1 bonus share is being issued for every 4 ordinary share held at present. For this purpose, 10,000 shares are to be provided out of reserve funds. So once again, they have clearly mentioned that company is going to capitalize the reserve fund, which is 36,000 currently available into the company's balance sheet under owner equity section, and the balance out of profit and loss account. It means that the number of bonus share company is going to issue, if those are greater than 10,000 rupees, then the additional amount of bonus share will be or subsequently be issued from profit and loss appropriation account. Finally, this last paragraph is asking us to set out the journal entries to give effect to the resolution and show how they would affect the balance sheet of the company. So now we will see how to pass the journal entries. This was the initial data, that is 4 ordinary shares are going to be 4 ordinary shares are required to be held at present to be offered with 1 bonus share, and currently there are 7,000 ordinary shares. So the first step to solve this question is to find out the quantum of bonus share to the existing shareholders. So we can divide 7,000 by 4 in order to find out the number of bonus share the company is going to issue. After division, it is 1,750 bonus shares. So now we can just pass the journal entries in our specific specimen of journal. As already explained, this is our debit column and this is our credit column, and this first one is for date column, and then account titles and explanation should be written on the top. So the declaration of bonus share issuance will look like that we need to debit the reserve fund account by 10,000, because the question already instructed you that you are going to debit reserve fund only with 10,000 rupees, and the remaining amount should be appropriated from profit and loss account, which is 7,000 in this case. Why this is so? Because 17,000 bonus share has been issued with the help of this mechanism, and then 1,750 share bonus share has been issued and calculated. This was the quantum of bonus share issuance at the rate of 10 each. So multiply these quantum of shares with 10. The resultant value will be 17,500. So this is going to be the rupees quantum of bonus issuance to the existing shareholders, out of which this 17,500 rupees, this will be covered from journal reserve fund by 10,000 rupees, and the remaining amount means this amount minus 10,000 will give you 7,500 rupees, and this will be adjusted from profit and loss appropriation account. And finally, this credit entry will remain same as previously explained at the start of this lecture. Bonus to the shareholder account, it will be credited by 17,500, and this was actually the declaration of bonus share issuance, a short narration being the declaration of bonus share. Subsequently, we need to perform another entry, which is the issuance of bonus share. So we need to write off this temporary account, which is bonus to shareholder account, which was credited in our previous entry, needs to be debited in this time. This second entry, it has been debited, and the journal fund and profit and loss appropriation account has been transformed into the permanent portion of the owner's equity, which is the ordinary share capital account. You can also write down the share capital account, or you can also write a simple two words as capital account according to your own choice and the book pattern which needs to be followed. So we have transformed this to reserve fund and profit and loss appropriation account into the permanent part of the capital by capitalizing it with the issuance of bonus shares. And then similarly, a short narration has been written, which is being the issue of the bonus share. It actually depicts what has been done in these two entries. The second part of question was asking us to show the impact of this bonus share issuance on the balance sheet section. So once again, this balance sheet was already given in this question, so we need to follow the same pattern, which is a partial balance sheet. The owner equity section of the balance sheet, which comes under the liability section. So we have written the liability section, and under the liability section we have once again needs to write this authorized share capital, which will remain as it is, 20,000 ordinary share at the rate of rupees 10 each, and it will be once again same 2 lakh rupees. Issued and subscribed capital needs to be adjusted. Previously in the question it was $7,000, but after the issuance of bonus share of 1,750, this number of share will become the part of issued capital, which is now 8,750. Previously those were 7,000, and now 1,750 shares as bonus has been issued to the existing shareholder. So now the total issued and subscribed capital has been 8,750 ordinary shares of rupees 10 each, which needs to be multiplied by same rate, and it will be 87,500. The second adjustment in this section will be in the reserve fund, which were previously 36,000 in the question, and 10,000 has been appropriated in the issuance of bonus share. So therefore 36,000 minus 10,000 will be 26,000 remaining in the reserve fund. And finally, in the profit and loss appropriation account, which was previously 29,000 in the question, but however we have subtracted 7,500 from profit and loss appropriation account, because we have appropriated and transformed this amount to the permanent portion of the company's owner equity section. So the remaining amount in this section or account will be 21,500. This was all about how we can write down the journal entries in the journal pattern, and later on we can incorporate the changes in our owner equity section. And furthermore, we can also set and adjust the reserve fund and profit and loss account if that are existing in the owner equity section of the company in the available question. After the proper writing and mentioning the debit and credit entries, we can adjust them to show the more realistic view of the latest balance sheet. So this was all about today's lecture. Thank you very much for listening to this lecture. If you have any question, you can ask them via my registered email or through mobile account. Good luck for the day. Allah Hafiz.